What's going on, guys? Welcome back to the channel. In today's video, I'm going to be going over the trades we have taken today inside the Discord, as well as game plan going into tomorrow. And yeah, so this is what we ended up looking like today. So when we pull up the calls and the puts here on the call side, going into the day, I was more so favoring lower. So not when it comes to like the option charts. When it came to ES here on the fibs now, we ended up pumping up all the way up in here yesterday in the end of the day, all the way up in here at the close over this 6,900 level. We end up pushing above it, and at this point when we closed above it, I'm like, okay, maybe we're gonna take this higher, but we immediately came right back below the level, and we were right back within the range that we were playing. So yesterday we were between this 6857 6900 level. This was the range we were playing because we went neutral, so whatever side breaks, that's the way we're going to be playing. So it did break to the upside, but this was late in the day, and it wasn't a great break. I mean, the closure above is great, but the next candle came right back below it. So given that we couldn't break higher, and remain above that level, I was more so favoring us to at least go to the 6857 level, which would be the bottom of the range. And I told you guys, if we get a break and retest of this 6857 level, this would be the ultimate trade to take, which we never got today, but that was what I was looking for going into today. We just got a massive gap down and dump off the open, so wasn't able to take that short. But after we had this massive drop, I was looking for longs, because if we look here, I always use, when it comes to the fibs, you want to be using the option charts in confluence with it. So this 30-minute chart, massive move down. I mean, this is such a drastic move on the premiums. You could definitely expect us to pull back at some point, and this chart did cross today. We were bearish, obviously, right after the open because this crossed, but that doesn't mean it's not going to pull back. I mean, when we get these aggressive moves like this off the open, 9 times out of 10 this is going to be pulling right back. So where can we pull back? So when we look at the higher time frames, 4-hour 50 is that spot. We end up hitting it. You can see what happened when we hit it yesterday, or not yesterday, the day before, whenever that was. Was it yesterday? Might have been yesterday, but we hit it right here. Immediate dump. We came right back up into it. I know it shot way above it. This is kind of where the fibs come into play. It kind of tells you where your best chances are to go long. So I don't just long the 4-hour 50. I need like a fib level. I need something in confluence. So we were at that 4-hour 50. We were way above it. There was still plenty of time for this to come back down. It's a 4-hour candle. You have to remember, we're not playing. This isn't like a 5-minute cross we're playing. This would be a 4-hour chart. There's only what 2 4-hour candles in the day. So knowing that there's a lot of time still, my favor is higher. So when we pull up the fibs now, this is what we end up taking today. So I took 3 trades. Where were we yesterday at the close? We were all the way up in here. We dropped through 1 fib, we dropped through 2 fibs, and we're already below the 3rd fib right off the open. This is the 3rd fib we broke below off the open, and we're coming into the 4th fib. I always say, when we are nearing like 3 fib drops on the day, that's when you want to start looking for longs. And this was actually the 4th fib of the day right here, this 123.6, and it ended up breaking, and I did try this for a long. So when we came to 69.50 on ES, or 67.50, I went long, 10-point stop. I got stopped out, and then you can see right here, this 5-minute candle started to bounce, so I got back in right around like 67, like 48, 49, and we got a little bit of a bounce up, 10 points, but that's nothing. I'm not looking to sell anywhere near 10 points on a play like this. And as that candle was wicking, I'm like, okay, I'm just gonna get out, because this 5-minute candle isn't gonna close above. I wanted to see us get back above this on the 5-minute. If it didn't close above, most likely it's probably gonna go lower and hit this next fib, where I will take another long at. So given that, I got out, break even, and then we got this dip all the way down to 67.23. It's that 138.2% mark, and we went long here on ES 69 or 67. I think like 25 was my fill, and my stop loss 10 points. Obviously never hit my stop, and we came right up. I was selling half at this next fib, which I probably shouldn't have, but when we have these massive moves like this, you could pretty much expect this first fib to break. I mean, it's very, very, likely that it will break and, not end up rejecting. But I was just playing it safe. I was securing, half the position there. It's 25-point move, so I sold half there. I sold more at 65, and then I'm pretty sure I pretty much sold the rest right around like 67, 68. But when it comes to like these moves, you could pretty much expect this first fib not to hold. You kind of have to understand the context of the market. When we have such a big drop and we're on like the third or fourth fib of the day and we get a bounce up to this fib, it's like, oh, technically we're still in, short in the rip mode, but it just doesn't make sense to take a short at 67.49. Like, it just doesn't. We're at such massive spots in the market. This is a trade I'm never taking. I'm never taking a short off of 67.49. Like, it just wouldn't make sense. A more realistic one would have been this 100% mark up in here, but that offered a little bit of a rejection if you got in right around here, 89 to 69. I mean, 20 points, probably go break even at that point, and you would have got to stop break even. But when it came to the trades for the day, you honestly shouldn't have even been taking anything else on the day. I mean, I just feel like once you catch a 40 to 60 point move on ES, like, that's all you need. There's no point in throwing more risk on the table after such a large move in the market. So that's pretty much what we did. And the reason I sold it up in here at 65 or 67, 65 was because of the 0DT chart. So I was just selling at logical spots. That first sub level, okay, is going to break probably, but it's just a key level that I'm just going to sell some at. And then when we came to this 5-minute 50, I started the contracts were like right around $2 when I got all out. I think like 190 to $190 to like $2 is when I sold the rest of it, because this is such a drastic pullback on this chart where maybe we do get a fat bounce first and eventually it does go and cross negative. So I just decided to close it all right there for 40 points. I mean, it was a really good trade. Like, when you could get a 40-point move on risking only 10 points, that's great risk to reward. It's a 1 to 4 risk to reward. If you guys don't understand that, pretty much means, okay, my stop loss is 10 points. If I sell it for 40 points, it's a 1 to 4 risk to reward trade, because you're risking 10, you're selling for 40. And that's a good thing about the fibs, because your losses are only going to be 10 points. I'm never selling a fib trade for less than like 25 points. It just never happens. Maybe like 20 points at the lowest, but that's a 1 to 2 risk to reward trade. That's still really good. But a lot of times these do net like a lot of times it's like a 1 to 2.5, because I aim for like 25 points for that first trim. That's typically where the next fib lies, like 25 to 40 point, like 20 to 40 points. It's a lot of times it's around like that 25 point mark is the next fib. So it's kind of like the average risk to reward. It's a 1 to 2.5 to like a 1 to 4. This trade probably was a lot more than that, just because if you targeted this next fib, I mean, that's like a 70 point move. That's like a 1 to 6, 1 to 7 risk to reward on that trade. I mean, when we come to these massive spots in the market, like whenever we're nearing that 4-hour 50 and there's, you're looking for longs, the fib trades, when we're, very, very extended to the downside, I mean, they provide really, really good like pivot points. I mean, I've seen this time and time again. I'm going to be posting a section in the Discord of like, a bunch of these trades, and it's pretty repetitive when it comes to these massive moves in the market where we get this insane pullback and then we end up reversing because we're at like the 4-hour 50, we're at a fib, and it nets a massive move. And I feel like these are the trades you're going to be able to capitalize on, and obviously they don't happen that often. Sometimes it's like, when the market's really volatile like it has been, it will, but yeah, it's a really, really good trade to take. And yeah, that's pretty much what we did today. Going into tomorrow, I didn't even look at the puts yet of what we look like. So okay, this chart not the best looking. If we end up gapping up, it's going to cross negative. We're going to see a move higher in the market. I'm not sure what these higher time frames look like. 1 hour, I mean, kind of breaking below the 50 there. 2 hour didn't cross. 4 hour obviously didn't cross. So pretty much key thing for tomorrow is going to be seeing what this 30-minute does. If we cross negative tomorrow, then you guys know. So this is where it comes to the fibs. I feel like a lot of people get confused on the levels where to put them. So when it comes to drawing the fibs, all right, the top and bottom pivot, which is the 100% and 0% mark, come from this 30-minute chart. It tells you where to pretty much draw them. So if this chart crosses negative tomorrow, all right, 10 crosses below the 50, what does that mean? We're neutral, okay? So if that happens, you go to ES and you find what two fibs are we between at the exact moment we cross negative, that 10 cross below the 50. What two fibs are we between? If that happens, most likely, I would imagine we're going to be between 68.28, 68.57, all right? So that's the range we are between. Now, we don't change any fibs yet. You have to wait for a break of this range. So if we break back below 68.28, we do not change the fibs. They remain the same because when we're in shorting the rip mode, the 100% is at the top, or the 100% is at the bottom, and the 0% is at the top. When we are in buying the dip mode, it's vice versa. 100% is the top pivot, 0% is the bottom pivot. So if it breaks lower, fibs, we keep these the same. If we break higher, this is where we change it, because the structure shifted in the market. We are now in buying the dip mode. So we break above 68.57. What do? We go and we flip the 0% and the 100%, and now the new low is this low. This 100% mark will get dragged to here. 100% stays, or the 0% stays, my bad. The 100% will go to the top, and the 0% will come down here to this new low. Because why is that the low? It's the last low we made in this bearish trend. You can see here, 10 crossed the 50. We had a massive move lower. This is the bear trend low right here at 10 o'clock. This is the low we put in during this trend. So we use that as our bottom pivot. So this bottom pivot is going to be your new pivot if we break out of the range to the upside. So we break above 68.57 on the 30-minute, and we go at least 10 points above, candle closure above on the 30-minute. Okay, we broke out of the range and we change our pivots. 100% level goes up here, and then 0% goes to this new low down in here. It's very simple. I don't know how else to explain it to get it in your head, but that is exactly how you do the levels of the fibs. Only like pivots you need to know is the 0%, 100%, because those are your top and bottom pivots. The rest of the levels just make themselves, because they go based off of where you draw the 0% and the 100%. So that is as clear cut as it could get when it comes to the fibs. You don't change it as soon as we cross negative. You have to wait for the range to break. It's very, very simple. So that's how you change the fibs. And again, when it comes to tomorrow, if we stay crossed bearish on the 30-minute, okay, probably gonna be looking for some sort of fib short. So let's just say market remains bearish and we break below this 100% mark. Okay, we break below 100%, we get a retest of it to short, and we play the downside. If we break higher out of the range and we come to 68.57, break above it, get a retest, okay, you can go long. So and then also you can play 0 DT crosses. It doesn't really matter which way. I mean, if we end up dropping tomorrow, obviously a put cross. If we end up ripping tomorrow, obviously a call cross. It's very simple when it comes to 0 DT charts. Fibs, you just play depending on whatever we're in, shorting the rip mode, by the dip mode. A lot of times when we're in a neutral range, I'm not really, eager to, take a trade. Like if, I kind of just like to let the dust settle once we enter neutral range and just wait to see what price action does. And when we get into buying the dip, shorting the rip, then I take advantage and then play 0 DT crosses, play the fib levels. It's pretty easy. So yeah, that's pretty much all I got. If you guys enjoyed, drop a sub, join the core if you want to learn. I'm out. Peace.